So a few days ago, this episode will come out a little late, but there was an assassination attempt on Trump.
Yeah.
Super, super crazy.
It's
So,
crazy.
I mean, I'm going through a refi deal right now over the weekend, and on Monday, I'm thinking, how is the appetite at the banks going to change? They're certainly looking at things like this, as they do with other macro events, probably international conflict, Gaza and Ukraine.
Yep.
We're in an election year. People are apprehensive in election years. There's these factors outside of real estate that kind of control real estate.
There are.
Um, Throughout your career, how big of an impact do these macro events have? We talked about 2008. That's probably the biggest one.
It is.
But what do you think moving forward as there's more political instability? Hopefully things change, but all of these changes that are occurring politically, have you seen an effect on the appetite of some of these loans or investors raising money? Where has it come to a head?
So we talked about markets earlier, and the capital markets or movement of money is no different than the Tampa Bay residential market, or the High Park market, for that example. On a national level, you have all these different sources of debt and equity. You have local, regional banks, you have insurance companies, you have commercial mortgage-backed securities, you have private debt funds, and you have a whole array of other private capital on the debt side. And on the equity side, you have everything from guys like you and me pulling out our checkbooks, making things happen, all the way through the further range. Like we talked about my buddy at Blackstone earlier and how they're the preeminent on that. And then you got everything in between in that stack. So that movement of debt and equity, it moves differently. And it does pay attention to the macro events. I don't think that the unfortunate assassination attempt that occurred is going to have a terrible impact on the market. If the outcome of that day was different,
Right.
that might be. But what I'll talk about is 12 months ago when a few of the banks started failing and there's a run on some of the banks and all
Right.
that happened. Now that was a meaningful change in the capital markets. That or interest rates going from 3.5 to 7.5, 8%. Those are meaningful events. A year ago, when there was that run on banks got concerned. I had 2 or 3 projects slow down, and banks come back and pull back. One of them retraded a loan and cut down the proceeds a lot. And then other times, the most common thing is they're now asking for more deposits as a relation on that borrowing. And so that's those trends. The banks tend to follow each other, and they tend to follow logical things. And they're low risk, low return because they're in first position debt. They're not making enough money. Whether it's 4% or 8%, you're getting a great deal. I think we've talked about this before on bank.
Yeah.
Bank debt.
Best partner ever.
Best partner ever. But they're not built to take on those. So when macroeconomic things happen, they respond, they tighten up, and they do it in a systematic way. Now, there's still ways to get around that, meaning you can work with other banks. Some banks still don't tighten up as much as others, or there's private debt funds, or there's your high net worth individual. So you can still get deals done, but it does have an impact.
Coming to the table with more cash, putting more money down, right? That'll affect the outcome.
It will.
So a stock guy.
Or prices dropping.
Price is dropping.
If debt tightens up enough and you have to have more equity, that equity is looking for return on equity. So if the amount of debt that's accessible in the market goes down significantly, like an event like that, ultimately cap rates, like if interest rates go up, cap rates go up and the price goes down.
Yeah, that makes sense. So a stock guy could play the stock market. They could play the news. They could get ahead. Okay, this event happened. Now I'm in a position to do this, to get ahead of that news.
Yeah.
In real estate, does it move that quick? Is it possible in development? And the only reason I ask is, I guess I'll just tell you my thesis first, and that is, we're in an election year. There's a lot of political unknowns and instability. In fact, it's pretty crazy if you really think about what's going on.
Yeah.
But put that aside. I believe that there's going to be an incredible opportunity this summer moving towards the election to be a buyer. I think there's an opportunity where a seller will get skittish and sell and get rid of a property, whereas before they may have held on to it. Another buyer could be apprehensive and pull out of a deal where you could come in if you have faith in your market. Yep. That's where I see an opportunity, is playing on some of the fear and having that faith in a local market or whatever product you're chasing, having faith it'll work out. And if someone else is scared, you immediately jump in with confidence. That's how
Yeah.
that's like my plan. That's the whole reason why I'm doing a refinance and I'm getting the gun cocked, ready
Getting
to pull the
ready.
trigger. I believe that there's going to be an opportunity until November at some point, and maybe it's a very small window to make a deal. In fact, you saw it during COVID. Really, there was like a 6-week window during COVID in Florida where you could make a hell of a good
Where the bottom
deal
fell out.
right. But
Is
then things escalated very quickly.
Yeah. Warren Buffett, articulated it really well, is it's best to buy when everyone else is selling, and it's best to sell when everyone else is buying. As that relates to America and the Tampa market, those are totally different discussions. It does feel like the residential market in the Tampa area has softened up a little bit now, but it was at such a peak before that it was an unrealistic, unsustainable peak.
Mm.
So the question is, did it grow so much that there's some bubble in it? And that answer is very complicated because the value of the dollar has changed, inflation. So much of that is baked into the discussion. If inflation has made our dollar 30% less valuable, but property values are up a lot, it can feel like we're in a bubble, but our dollars were so much less that hedged into some of that. Oh, my property went from $1 to $2 million. I'm rich. Well, okay, except your value is 30% less. So you really only made 600,000-700,000 in an actual gain.
I have that conversation all the time. My house is worth so much. I have all
Yeah.
this equity. It's so exciting. But if I sell it, where the hell am I going to go? Exactly. That's the problem. Is inflation is this hidden tax or a hidden
Yeah.
cost that people don't think about. And yeah, your property went up and you made a few extra $100,000, but that few extra $100,000 doesn't buy you any more than
Does.
it did, years ago.
It's the consumer price index and all this stuff with the government and politics and inflation, the data is not great and it's
No.
very political. But I'll joke. There's a place in Miami that I buy burritos from for $6-7 5 years ago. They're now 18-19 there. And like to me, that's real, right? That's lunch. You're used to it. It's still a delicious burrito. I know all the owners, and you're looking at like that's a real sign of inflation.
Yeah.
That, of course, the property values, is going up to hedge it. But
And I think more than any bad news about any political issues we have in this country, I think what's worse is some of the inflation and the printing of money. Um, and also just I think some of the issues we have with international policy. I guess all that to say, just things need to change in this country financially that I think are
yeah,
way bigger factors in all of
way,
this than an assassination attempt. Granted, like you said, if that outcome was different, boy, what a different conversation we'd be having. However, news like that, political news like that, I think, and even like a small run on the bank like we had, and some of those little news pieces are so small in comparison to the larger issues in the Federal Reserve and the money supply and these macroeconomic
yeah,
China trading, oil, all
yeah.
those huge factors are way more of a problem.
And it does, the amount of debt that America has put on itself is concerning. And it goes against what we're trying and should be teaching our new generations about fiscal responsibility. And at some level, you have to believe that the folks have better data and are making better decisions. And other times, as we all know, the politicians really make big mistakes. Um, I was very concerned a year ago, and some of my friends talking late at night about, with what's going on in Russia, countries were dropping the US dollar as the currency. And remember, a year or two ago, it was scary with inflation because inflation was going up so quickly that the government had to change the rates. And so when the government took call it the regular residential loan, went from 3.5 to 7.5, 8%, in like unprecedented amount of time. And all of us on the street are saying, oh my goodness, this is
Hmm.
so challenging. And it is really challenging whether you're buying a house or whether you're developing a large commercial project. Debt going, so if you just think about $10 million at 3.5%, that's 350,000 a year in debt service. If that goes to 7.5%, that's 750,000. So your project that used to throw off a few $100,000 now throws off zero, and your bank's coming and calling. And that actually happened a lot. But getting back to the point, America's been around now for 400 years, plus or minus, and you've learned a lot, and these folks are very smart. And what I have to imagine is happening is they're saying our biggest threat is the US dollar not being the global currency. And therefore, we can't let inflation get rampant. Because if the rest of the world loses faith in the US economy, we've got bigger problems. And if you think coming out of World War II, what made America extremely strong was controlling the waterways and controlling international trade and building a global economy where everyone could benefit. And that's how America became what it is today, of a superpower. And part of the trade-off with that was the Cold War in Russia, and saying, going against all you countries, we're going to help you ship stuff good, and we're going to make this global thing where everyone prospers. And for a big part, you've heard, people are living longer, people are richer, people are healthier. Well, there's some overeating problems, but that's a different tangent. But as a whole, the life capacity and quality of life is better for the whole globe. And even countries like Africa, way far behind, are catching up. Well, that's all part of the globalization. Now the globalization, it's going back to in-migration, building stuff in your own country and some of that. But we have to count on the U.S. government making the right decision.
Boy, that's a risky assessment, to trust the U.S. government to make the right decision, because it seems like they've gone against the younger generation's interest, but it's also very complicated.
By adding the debt?
That's one thing. I think some of the relationships we've built with other countries, I think we have too much militarization of other countries. But here's the thing, though. After World War II, we forged amazing relationships with some of our adversaries. And now those adversaries are our greatest allies, and their economies have been propped up by us as trade partners. Like Japan is the perfect example. They've exploded in growth over the last few decades. I mean, they have an amazing economy, along with China. China's an air quote adversary, but they're our greatest trade partner, and look at their economy over the last few decades. I mean, it's exploded. So really, America has been the catalyst for the entire world, and that's shifting. And that's where things get weird. That's where I don't think, I don't know who would sit in the chair you're in to answer some of those questions, but I do think that it all comes back to faith in a market. Right. It comes back to the faith you have in your particular market and how much you believe in your project. I don't care if you open a bagel shop or you're a real estate developer.
Or you're running the country.
Right.
It's a project.
It is a project, and you got to have faith in what you're doing.
You have to have faith in it. And look, and as an aside, the China, Russia, some of that, I was nervous when some of those folks are going off the U.S. currency. You're like 7 or 8 nations within a short span dropped the U.S. dollar over energy trade. On the flip side, China, that's our biggest concern, in Russia, they don't have it together. Like, they really don't have it together. And so it's concerning when they start aligning. But on the flip side, like, the one data point is the U.S. military spend, 800 and something billion. The number 2 nation is something like 80 billion.
Yeah.
So we're still pretty far ahead. We're still a pretty great land, and pretty safe.
Pretty safe. We can sleep well at night.
We need to show up and do our jobs and pay our taxes. I of course use depreciation, everything else other American business people do, but I remember paying my first meaningful tax bill and saying like ouch, but heck, I built and sold a substantial project and made a profit. Like, I have to give back to this country.
Yeah, I had a big tax bill last year, and And the last couple of years really was the first time in my life where I think when you start to make some decent money, you realize this as a young person, but you start to pay attention when you write that check. You go, oh, like, let me start to care about what I'm paying attention to politically. Now that you start paying the tax man, you start caring a little more.